John, today's question comes from Sandi. Sandi said, longtime listener here. I never miss an episode. We just received a letter from our insurance carrier stating they'd like to increase the rate of our umbrella policy by over 74%. It got me thinking, why did I choose a $2 million umbrella policy? Are we overinsured? I thought because John is a lawyer, he might know a few concrete examples illustrating how much people actually need. We're close to retirement age. If the details make a difference, we live in New Jersey. Our house is worth over $1 million and not in a revocable trust because our lawyer said that New Jersey probate is simple and inexpensive. And it's not in an irrevocable trust. The house has gone up 4 times in value from what we paid for it over the years, and we don't want to lose the stepped-up basis to the date of death value. Beyond that, we have 2 cars, retirement savings, worth about $2 million and $200,000 in a high-yield savings account. How much do we really need for an umbrella policy? And then she goes on to say, and guess what? I'm not an engineer.
Excellent.
So she had to let us know that she is one of our non-engineer listeners.
So I got a couple of things on this. So first of all, at some point, I would like to bring on to the show a plaintiff's attorney.
Yep, I'd love that.
Just a good old and I know a guy and he's great, and he would actually be like the perfect person to ask this question because he can really kind of tell you what it looks like from the eyes of the sewer.
Right.
And so we will do that. We will schedule that at some point. So be sure and look out for that. I already, like I said, I know the guy who I want to bring in because he's great. The other thing I wanted, and this is not related to Sandi's question here, but this jumped out at me. Okay. So our house is over $1 million, not in a revocable trust or irrevocable trust. Parentheses, our lawyer said in New Jersey, probate is simple and inexpensive.
Right. I thought that might stand out to you.
It did. This is something that I hear from Texas attorneys all the time.
Mm-hmm.
Is you don't need to worry about trying to avoid the necessity of probate because Texas has simplified probate procedures. I've never, in 20 years, I've never sat down with the heirs of the family and them say, well, John, after this discussion, I'm so excited that we're going to have to go through probate.
Right.
It doesn't matter how. So as the attorney, when I say something is simple and inexpensive, I'm comparing that to the other things that I do that are complicated and expensive.
Right.
But just because my terminology, that doesn't mean that that's your terminology or your kid's terminology. Mm-hmm. Right? Because, okay, so maybe the process is relatively simple and relatively inexpensive. Do your kids live right there in New Jersey or do they live in Kansas? Because how much now is plane travel back and forth to attend a hearing in New Jersey and the Airbnb that they've got to stay in to do the work? I mean, there's just a lot of other factors in all of that. So I did find that somewhat comical. And the evil part of me goes back to an attorney that I worked for when I was a little baby lawyer.
Yeah.
That would say, we never recommend avoiding probate because that always guarantees us a future client. They're always going to die. And if we make sure that their assets go through probate, we always get to do the probate, regardless of how inexpensive and simple it might be. So anyway, a couple of things. So to your main question on the insurance, what you're having is a question about asset protection, right? Yeah. First thing you should always look at when you're having an asset protection question is what assets do you have that are at risk? Mm-hmm. Now, I don't know New Jersey. I could look it up, but I didn't because you just read me this, and this is
right. Yes.
Right. This goes back to our pre-planning of these episodes.
Right. Yeah. The extensive due diligence we do in getting ready.
But we have people that live all over the country, so there's no point in getting specific to New Jersey anyway. But so the first thing is like Texas, for example, has an unlimited homestead exemption. Mm-hmm. Doesn't matter what the amount is.
Yep.
But that's not the case in other states.
Yeah.
So your house is worth over $1 million, my first question is, what are the homestead exemptions in a creditor situation in New Jersey? Is it unlimited value, or is it capped at, say, $1 million?
Right.
Right? So what are the exemptions there? Are IRAs and 401ks exempt from creditors? My microphone is falling away here.
It is. It's dropping on you.
I may have to.
That's that.
I'm gonna have to hold it with my finger here.
Prop it up.
It's ridiculous. All right.
By the way, that is a $200 mic stand.
Yes, that is slowly inching its way down. Okay. All right, but so the next question, what about your retirement accounts? Are those exempted to the full amount?
Right.
Again, Texas exempts IRAs unlimited amounts, but not every state does. Now, I would think your high yield savings account, that's going to be an asset there. But let's just say that you live in a state where your homestead is unlimited and your retirement accounts are unlimited, which means that a creditor of yours, they can't get Social Security, which we've discussed on a previous. So the only thing they could get would be your $200,000.
That's the extent of your exposure.
That's the extent of your exposure. Yep. Worst case scenario. So
do you need 10 times that amount in an umbrella policy?
That's right. And the answer to that is probably no.
Yeah. Right.
Now 1 million, maybe.
Yep.
Here's what, and I think this is what that my plaintiff's attorney friend would probably be saying. But imagine you're sitting in a mediation. You have been sued, right? And you walk into the mediation and you've got 2 attorneys with you. You have the attorney that represents you that is paid for by your insurance company.
Right.
And the other attorney you've brought with you is your bankruptcy attorney. Now, you haven't filed bankruptcy.
Right.
But you've brought your bankruptcy attorney with you to the mediation.
That sounds like a sneaky lawyer trick there.
Now you're sitting there, and now on the other side of the table at this mediation is the plaintiff.
Right.
And they're catastrophically injured, whatever the deal is, right?
Yeah.
Now your insurance agent is saying, here's the policy limits that are available. We have $300,000 basic auto, and we have an umbrella policy of X. We're willing to tender that because the injuries are significant.
Yeah.
You can either accept that or we go to trial, right? This is your insurance company attorney that's representing you. This is their position in the mediation. Now, the plaintiff's attorney is saying, look, our damages for this catastrophically injured person are in excess of those policy limits.
Right.
So we don't want to accept just the policy limits. We want to file suit and get a judgment in excess of the policy limits, at which point your bankruptcy attorney steps in and says, these people live in state X, which exempts homesteads and IRAs to an unlimited amount. These people have homestead and IRAs and nothing else, or not much significant else.
Right.
So if you proceed to judgment and you get a judgment in excess of the policy limits, I'm going to file bankruptcy and discharge your debt.
Yeah.
Now your settlement position just went up.
Oh, yeah.
Because now put yourself back in the shoes of the plaintiff's attorney.
Yep.
Do you want to spend the next however long getting ready for a trial, doing the trial, putting that in the hands of a jury, which who knows what comes out of that?
Yeah.
Maybe you get a judgment in excess of the policy limits.
Yeah.
But now you've got to collect it.
Right.
And if these two turn around and file bankruptcy,
Yeah.
now you're stuck in the bankruptcy situation and dealing with any other creditors that they have, their credit cards, and maybe they got a mortgage on their house or whatever else, because you're dealing with all of that. Basically, your people aren't going to get paid anything more than the policy limits.
Mm-hmm. Which is right back where they are today with the offer.
And so they go back into their little room, and that plaintiff's attorney sits there with the client and says, look, the most we're ever going to get out of these people is those policy limits.
Yeah.
So now, if the only thing there was the $300,000 from the base auto, they might risk it.
Yeah.
If the damages were significant.
Right.
If it's $2 million, they're jumping for joy.
Absolutely.
because they're dang sure going to take the $2 million.
Yeah.
Right. If it was $1 million, though, they're going to talk about it.
Yeah.
But the plaintiff's attorney sitting there in his mind is also going, 40% of $1 million is still $400,000, and I don't have to go to trial.
Yeah.
So I'm going to encourage you to go ahead and just take the policy limits.
Yeah.
So you want just enough.
Yeah.
But you also have to make sure that the assets you have are protected.
Mm-hmm.
So conversely, if New Jersey, for example, only exempts the first $1 million of Homestead, maybe that's going to revisit that irrevocable trust situation.
Right. For sure. Yeah.
You know,
so depending on the rules of the state, you need to review how much exposure you actually have. And then the other piece that I would throw in there is that, insurance companies will raise premiums on certain policies based on their individual claims history on those policies. And so she did throw in some extra information here about why that premium was going up so much. So, for example, my car insurance recently went up. And it wasn't because of any claims that we've had. It was just by class. This company had higher than typical increases in claims for collision on all of the automobiles that they insure. Mm-hmm. And so they raised premiums on everyone. It went up. Well, at that point, it was time to start shopping. And Sandi, I think that may be the case where you are here. What these insurance companies will do is if something is becoming unprofitable, they will say, look, we're just going to raise our rates. And those who stay, stay. Those who don't. But we're not really making any money on this. So that's fine. They can leave. It may be an insurance company you have a deep relationship with that you've been at for years. But if they're going up 74%, it's time to go out and start shopping that.
That's right.
No question. Because that sounds like a massive increase for an umbrella policy.
Especially for an umbrella policy.
Yeah.
So yeah, I would consider shopping around for sure.
For sure. Perfect. All right. Good question, Sandi. Thank you so much for that. And for the rest of our listeners and viewers, you can go to bigpictureretirement.com, top right-hand corner, leave a question right up there. All right. Thanks so much.